Will product costing make your profit better or worse or no different? Let's have a look. So won't they just, whether I treat something as a product cost or a period cost, won't it be the same profit at the end of the period anyway? So let's have a look we'll try and answer this question by way of an example. Let's say a business buys 5 fridges on the 1st of March and is charged cartage inwards of $200 from the supplier. So they deliver them to us, 5 fridges, $200 each. So we could call that a product cost of $40 for every unit, or we could just write it off as a period cost upfront at $200 before any of the units are sold. So will that make a difference for our profit? Well, let's have a look. So if we sell 1 unit, under product costing, I'm going to allocate it at a rate of $40 for every unit sold. But for period costing, I'm going to allocate it up front for $200. Doesn't matter how many I sell. If it's a period cost, I just allocate it as a period cost straight up front. So if I sell 1 unit, my product cost will be $40. But my period cost, if I treated it as a period cost, the expense would be $200. I'd actually be better off by $160 if I use product costing. If I sold 2 units, under product costing, my expense would be $80. But under period costing, my expense would still be $200. I'd still be better off, not quite as much, but I'd be $120 better off. If I sold 3 of the fridges, under product costing, my expenses would be $120. Under period costing, they'd still be $200. So my profit would be $80 higher under product costing. Sell 4 units, product costing, $160 expense, period costing $200. My profit would be $40 higher. So we can see what's happening here. The profit is going to be better under product costing. It's getting less and less each time until eventually, let's say we sold all 5 fridges. So if I sold all 5 fridges, the product cost expense would be $200. Now if I treated that same cartage inwards as a period cost, the expense would also be $200, which basically means my profit would end up the same. So what have we learned? How can we answer this as a question? Let's look at it as a graph. Product costing, if I sell 1 unit, the expense would be $40. Under period costing, it would be $200. Sell 2 units, under product costing, the expense is $80. Under period costing, $200. And you can see if I don't sell all the stock, as in I've got 5, I've only sold 2, my profit will be better under product costing because my expenses are lower. So this is lower than this is lower than this, and so on. But then we see as I sell more stock, the lines get closer together till eventually when I sell out all the stock, I'll actually end up with the exact same expense in either system. So if I end up with the exact same expense, my profit's going to be exactly the same. So I guess the question here is, well, how do we answer this? Well, why is profit the same when all units of stock are sold, but why is it different when they aren't, when there's still some that are sort of remain unsold? It's because product costing only treats it as an expense when the stock is sold. Period costing treats the expense, all of it, as an expense up front, regardless of the number of items sold. So under product costing, the cartage inwards, if I sold 1 unit, the expense was $40. Under period costing, if I sold 1 unit, it didn't matter, the expense was $200. But under product costing, if I sold 5 units, the expense was $200. Under period costing, the expense, again, was $200. It was the same. So the long story short here is, what have we learned? If product costing is used for a particular cost, cartage inwards, buying expenses, customs, anything like that, what will the impact on your profit be? Your profit will be higher if some of the units remain unsold. But if you sell all of the units by the end of the period, the profit will actually be the same.